So, welcome. Today we're going to talk about the difference between the aggressive entry model and the passive entry model. We will go into deep understanding of when to use which one, because as I said, I'm using both. And if you ask me which one do I use more, I don't know, bro. I use both. It always depends on the situation, but both have the advantages and disadvantages. Okay, so basically, what they told in the previous videos, aggressive entry right here, if you were long, would be around this area. Okay, around the breakout area, maybe after the breakout, maybe before the breakout, but that's aggressive entry. Why is the name aggressive? Because if there should be just a normal pullback, but the overall trend is still bullish, you're most likely hitting stop loss depending on how you put your stop loss, how tight you put your stop loss. In this case, let's go back. The passive entry would be in a demand zone, in a support zone, or after a negative break of structure, okay, after a sweep. Now, what are the disadvantages of both? The disadvantage on the aggressive entry, is you can easily get stopped out. Yeah, stop loss can be hit just by a pullback, depending on how you put your stop loss. What's a negative on the passive one? It is sometimes you're gonna miss out on trades. Imagine on this scenario, the chart is slightly dropping, but then keeps pushing and never coming back down. You will miss your entry, you will miss money, but that's at the same time a wrong thought, because you shouldn't say, oh, I missed a trade now, that's shitty. You're at zero. Yeah, you didn't lose money, you didn't make money, but that's good. Okay, and that's the thing when you're using the aggressive entry model. Yeah, I mean, we can show it on the charts. Let's open the charts. For example, here, okay, in this case, let's say we are long. Okay, why? We took out the structure, we slightly tap into the fair value, and now the aggressive entry, let's make a one-on-one risk reward. That will be the aggressive entry. You're straight going with the flow, and the passive entry would be somewhere around here, in the demand zone, even after the structure break. Okay, now let's see which one would perform better. Let's make it like this so we can see it better. This is a 50-minute. So the aggressive entry, we are in the trade, and boom, full TP hit. While on the passive entry, you would just wait for nothing. Yeah, you would just wait for extra confirmations, but you miss the whole move. Okay, you see, that's the advantage on the aggressive entry model. Yeah, going for the breakouts without too many confirmations. Again, you can trade as how you want. That's how I trade. Yeah. Simple price action, market structure points, simply following the trend, and don't overcomplicating a thing. But let's do another example. Let's open a random chart again. Okay, so let's say on this case we are bearish. Okay, bearish order flow, we are testing the internal lows, we're going bearish. Okay, so but not that big, we want a scalp. So basically, this right here would be the impulsive move. You are straight going with the flow, And the passive entry would be after, for example, it retraces back to the fair value gap or maybe to this supply zone, and we're entering right here. But let's make the trades the same size so you can see the difference of each entry model. So on this case, we're entering right here. Let's see. Okay, we are big in drawdown on the aggressive entry, as you see. That's exactly what I'm telling you. That's the only negative thing. You're entering too early. That's why you should think twice and think wisely before choosing between passive and aggressive side. Let's see. And boom, stop loss hit on the aggressive entry. So you would just lose money because you entered too early. You went for a too fast break of structure. And now we're going, and the passive one, boom, TP'd. And that's literally beautiful that I hit both examples in two different trades. Yeah, now you see the disadvantage and the advantage of each. On the first example, we missed the move with the passive one, but on this example, we hit the trade while we lost on the other one. You see? And now the question, what is better Greco? To be honest, I don't think there is a better one. It literally just comes to how you trade, yeah, your overall trading style. As I say many times before, I am doing both, and I will always do both because it always depends on how the price is moving. In this case, for example, on the aggressive style, we made +1 risk to reward and -1. On the passive one, we missed one and we made one. So in total, we would still be up on the passive one while on the aggressive we are at break even. And that's what I'm telling you. When you're not too experienced, when you're still starting, when you're not like 1 million funded or whatever, I would tend you guys to recommend, let's say 60-40, yeah, 60% passive entries and 40% the aggressive ones, and or even a little bit more passive. Because when you miss out on a trade, it's not a shame, it's fine. But when you make too many unnecessary losses, you will feel the pain in your pocket, in your wallet, whatever. Again, let's do another example. Let's open another random chart. Here. And you know what I want to say, right? Where is the aggressive entry? The aggressive entry is right here, straight into the breakout zone. While, where would be the passive entry? You could say here in the fair value, or maybe here in the last demand. So maybe I would draw it like this, okay? So what do you think, which entry would be better in such a position? Because the move is already a lot flying, you see, we break the structures to the upside 1 time, twice, 3 times, 4 times, 5 times. So now, me personally, after such a long move, I would expect, or I would tend more to the passive entry. Yeah, if we would be around here after the first few breakouts, nearly at the area of an internal zone, I would go for the aggressive entries, okay? But we broke them already, and we broke the highs again and again. So now I would most likely wait for a passive entry model. Yeah, where in the demand zone and the fair value gap. Don't overcomplicate it. Yeah, don't overcomplicate trading. That's the most important thing. I'm trading super chill, and maybe some of you, I don't know who's watching this. Maybe some of you will not like what I say. I say, that's it? What the fuck, Greco? And yeah, that's it, bro. That's how I'm printing my money. It's easy money, no stress, and life is good. Yeah, compared to different traders who are talking about 5 confirmations and order block reversal. You know, bro, at the end, you're just making a decision, and make the decision as clean as possible. So, still, the chart could fly up right here, and we will miss the entry, but that's fine, as I said. Yeah, missing out on a trade is not a shame. But let's see. So now we break up the highs. And if we tend to break them again, then this idea is invalid. Why? Because I am going with the flow. And when the flow keeps going, and it's going for a while, the idea for me is gone. Because I am trading, as I said, momentum. And momentum doesn't mean after 8 hours. It means right now, in a few minutes later, or whatever. So let's wait and see. You see, now we would be in the area where we would enter. So listen. Now this is a whole different story again. Even if we touch, normally we would enter right here. But now I'm waiting until we break either this area here or this area here, and then I'm looking how the price is behaving before I'm making another decision. And you see, that's momentum trading. Yeah. Now let's see, boom, we took it out. Now we can make our updated passive entry model with the flow. Let's see. We're going slowly so we can follow the chart, and boom, easy TP hit on a 200k account. 1% risk, 2% risk, that would be 4 grand, 2 grand, one trade. So let's go for another aggressive entry model. Okay, that looks clean. Yeah, we see we have a higher time frame key zone. We are in the zone, we're internally in the zone right here, but we are breaking structure to the top side. Now again, where would be the aggressive entry model? It will be around here. The passive would be either in the fair value gap, but that would be too short for such an aggressive move. So I would put this passive entry model around here. Okay? Always in a zone where the price started the big impulsive move, not between all this fair value gap shit. So the aggressive entry would be this one, okay? And the passive entry would be something like this. And now let's see. We're in the trade. Trading user lagging hard. Okay, we're going into drawdown. Boom, stop loss hit. And now it keeps flying. So you see, the aggressive entry got stopped out. While on this one, we put the entry position too low. If it would be a little bit higher, the passive entry model would be the perfect trade. Yeah, but we didn't get taken out in this one. But now we keep moving. Let's see what the chart does. Okay, so look at this. Again, aggressive entry model straight after the breakout, or you're waiting again for a pullback into this area and make an entry here. But in this case, even if it looks crazy, I would go for the aggressive entry model right here rather than the passive one. Why? Again, we have the higher time frame key zone areas. Price either touches the area or breaks it. It's always one of both. Yeah, either a test or a breakout. And that's enough to know. Yeah, so we know areas like this work as a, what's it called, magnet. Yeah. So let's see. I mean, obviously it can still reverse, but that's trading. Yeah. Boom. Big reversal candle. Big reversal candle again. And this should be the TP hit. Boom. Clean TP hit. Yeah. The side between passive and aggressive entries. And now imagine you keep doing it and doing it. You're practicing on live markets every day, with real money. Imagine how good your skill can be. That's how I reached the 80% win rate, or even on some accounts I had a 90% win rate. So, I hope you understand now what I mean with accuracy and passive entries. You can name it as you want. Yeah, an accuracy entry model is just a breakout. Even we can do it on a chart as well. Like for example, let's say we are short. Yeah, we're watching the chart here, and we are short. The accuracy entry model would be when the chart would fall and you're going somewhere here in. You're going here in short. Okay. The passive one would be after retracement, as we see here, or even longer. We're waiting until a fair value gap gets filled, or maybe a last supply gets tested out, and then you're making here your entries. That would be the passive entry models. Yeah? And the accuracy one would be around here. And when you ask me what I would do in this case, I mean, let's look at the overall view. We have a big push up, and now we are breaking slowly but steady the downside. Yeah, we broke it again. In this case, I would wait for the passive entry model, because we had already big pushes down with huge fair value gaps, huge price imbalances, and therefore it will be safer now to see one of those to get filled before you're putting in your short and going with the flow. Because as we know, the charts will manipulate and go randomly a lot of times, and going after such a huge move, remember that's a 1 hour chart, so basically we are looking at multiple days up to weeks right here. And now the momentum has shifted. Yeah, it's getting slower. The short sellers are losing power, so therefore there is no reason for me to go aggressively short here. But let's see. And you see it's rising and it's rising. You see, we would already be stopped out. We're still waiting. I'm still waiting. And if it's dropping, it's fine. That's cool. But you see. So, for example, we could put our entry right here into the beginning, into the start of the bearish order blocks. Where the fair value gap, where the price imbalance starts, the candle, a few candles right before that. Okay, like this. See, you can put it in the middle of it, at the beginning, at the end. Yeah, that's like a experience thing, because again, there is no perfect entry. Understand that trading is not a fucking game where you can just copy and paste stuff. The price is not moving always because a candle is doing that or this. Yeah, the overall view is important. But let's see. At the same time, when we say we're waiting until the price moves around there, we can also long the price around there. Now let's see. We had here a bullish move, right? This candle. It's a momentum candle. Yeah, a huge momentum shift right here. I would wait until the chart, the price goes around here. And then I would see first how the price is reacting in 1 and 5 minutes. Yeah, because again, this is just a forward testing. We are just skipping candles. But in real life, it's again a little bit different how the candles form. Because they are in real life forming. Here you're just pressing and the candle appears. But I would either enter around here or a little bit lower after we took them out. Let's see. Okay, now we're in the trade. Trading view is lagging again. Let's see what will happen. Okay, that's kind of a very slow price action right now, but still you just want to learn the order flow, right? The momentum flow, and boom, beautiful TP hit, easy game. You would just wait like for this 2 days, but you see it is always the right logic behind it. Now let's see how this cutie will went. Yeah? Our first idea of a passive short entry. And for this one, again, I'm asking you guys, was this a passive long entry or an aggressive long entry? I'm waiting, think for yourself. And the right answer is that's a passive entry point. Why? We're waiting for the price to drop below into key area points, and then you're entering. Let's see what the short will do. Right now, for example, when I see this, I would change the idea to a little bit even higher, because now we see we're forming a consolidation and it will barely happen that we will just break out and then go short. Most likely when we form a consolidation after a push, what most likely will happen is we'll make another leg, another fair value gap, yeah, and then maybe we can start dropping, yeah. So don't enter too early. When you see such a confirmation, wait. Now we're waiting around here, okay. If all this didn't happen, the entry model would be way earlier, way below. But now you see what happens. Yeah, we didn't get taken out here. Close before our entry point, the price dropped, and now consolidating. That means be careful. You can enter even later for the perfect entry. Okay, let's see how the idea goes. And if it's keep dropping, okay, well then it is what it is. Yeah, that's fine. Just don't do useless trades to damage your trading account. And if you never get taken out, then it's also cool. But I think it will happen now. I'm pretty sure. But also in this case, yeah, huge momentum. We could, let me delete this really quick. On this case, yeah, momentum trading. What does happen here? Huge momentum candle. We broke a lot of structure points here. You see this? That means, for me, the short-term momentum is shifting bullish. Now the option. Will we make an aggressive long entry here, or will we wait for a passive entry right here? So it looks like we're testing the zones out. So we can make our aggressive entry, target internal zone, or right at the top of this momentum candle. Again, we're either breaking structure points, or we're just testing them. That's it, bro. That's all you need to know. Okay, let's see. So that will be the perfect entry point for the passive entry. And now you would enter around here, or even a little bit later. But now we're in the aggressive one. Let's see how it goes. Okay, let's make faster. Just to understand the price flow. Okay, you see, beautiful. We could put stop loss to break even, no risk. Now we have either $2,000 or zero. And boom, another TP hit. And you see, I am doing this like literally on, what's it called? One tape video, uncutted video, yeah? Like, that's the honest thing you can literally do. And I'm showing you how easy it is. Yeah, maybe some of you are confused because you're like in a different teaching, on a different course, whatever, a different mentor, and he's overcomplicating that shit. Bro, the goal is to make money, but listen, Yeah, we will talk about this in the psychology section. The goal is not only money. Yeah, we think the first goal is money. Bro, why the fuck do you want money? Huh? Why the fuck do you want money? Why? Because the main thing you want is this. For what does it H stand for? Happiness. Bro, you don't want just money for money. You want money because money can give you happiness. Money can relieve you from stress. Money can make your life easier, better, more joy, whatever. But at the end, it's happiness, joy, right? So that is not the number one thing. The number one thing is happiness. And now guess what? Earning your money, how you earn it, also affects your overall life. You understand that? When I look around the industry, yeah, some people call me arrogant, but to be honest, call me arrogant. I know exactly what I do and why I do it. And I know that is the smartest way. Yeah. The way how you earn your money is also important, and I earn my money easy. Low stress, smooth, no complicated bullshit. I am not here to impress anyone, okay? I am here to make my money, to fuck off the charts, and live life, enjoy life, right? And now imagine there are two different people, yeah, A and B. B makes easy 50 grand a month with pretty chill, pretty smooth, no stress trading strategy. Trader A makes 20 grand, but with a lot of stress, a lot of losses, 5 risk to reward, headaches. What the fuck, bro? Even if you have 20 grand, bro, this 20 grand will feel like fucking shit. And that's the honest reality, because I know it, yeah. I am good with a lot of traders in the industry, the top tier traders, and I know how it goes. I don't overcomplicate it. The happiest traders are the ones who are earning the money on the best ways, on the most efficient ways, right? So yeah, that's it about the aggressive and passive entry styles. I hope you understand how to do that. And in the next few videos, we will talk about how I'm reading momentum better and on which key zones I'm looking at. Alright? See you guys.